Hi everyone, welcome to JEDi episode 19. My name is Jimmy, and with me today are Ethan and David. For those of you who tune in to our Facebook Live for the first time, and if you want to know more about us and the name JEDi, do check out our first episode in the video section. I'll be the moderator for this episode, so here's how we'll run through. Firstly, Ethan and David will be having a fireside chat on investments part 8. Then me myself will be sharing a bonus section about commercial properties. Then last but not least, we'll have a Q&A section. So feel free to post your questions in the comment section below, and we will address them later during the Q&A section. So without further ado, I'll let Ethan start the ball rolling.
Okay.
Ethan?
Hey, hi everyone. I'm Ethan, the founder of PolicyWoke. So today's content will be actually talking about what is a bond, what is the difference between a bond and a bond fund, and this actually intrigued us because we noted there was some calculation on simple interest and compounding interest, and would like to maybe help to clear this issue. So it was actually a question from the previous episode. So without further ado, we will start the next slide. Okay, what is a bond? So it's actually to give money to someone. Then based on that capital that you give, you take the interest on it. So the why there is bonds actually a way to invest and mainly to take interest. So a lot of us will be investing, like even putting your fixed deposit into a bank, right? That one is you give money to someone, then you take interest from them. So that is like a bond really, but the structure is just slightly different.
More fluid.
So for a bond, it's more of like I loan you money, you pay me interest, and my capital after a certain period. So that is what is constitute a bond by right, a very layman term. But in a very technical term, it's basically loans to companies or loans to government. So there are actually two major types of bonds in the market. Okay, there's a government bonds, which a government issue out when they take money in. So these are actually like treasury bills or even our government bills, the T-bills that is given out from MAS. And there's also the second kind, which is the corporate bonds, which is rated from AAA to even junk bonds like B or triple B minus, those kind. So even for bonds, right, there is high risk bonds and low risk bonds. So you have to take note that when people say bond is safe, no, not exactly. It also depends on whether it's high risk or low risk. So the minimum to buy a bond is 250,000 in the market currently. So more or less is for high net worth. I mean, how many of us have 250,000 in our bank now? Unless you're high net worth, really. Okay. So these are the common metrics used when you're looking at a bond. So for coupons, they are actually just yearly or half yearly payments. Coupon interest rate is actually based on the interest given on the capital. So for example, if I say my coupon interest rate is 5%, so based on the 250,000 bond value, it will be about 12.5 12.5 1,250, yeah, about that amount. So that will be interest given to you. And par value is actually the face value of the bond. So it could be 250,000 or it could be most of the time it should be 250,000, the face value of the bond. But sometimes par value can be higher or I mean the price of the bond can be higher or lower than the par value depending on the interest of the market. So par value is the face value, but the price may not be the par value. Just take note of this. And maturity is actually the date which the bond will give you your capital back. So what is a bond and a bond fund? So a bond fund is a fund that invests in bonds. So let's say we have a fund, 10 million fund. So they actually, with that 10 million, they'll buy maybe up to, because each bond is 250,000. So 4 bonds is 1 million. 10 million, they can buy 40 different bonds. So when you invest in a bond fund, you're able to invest with very little amount, with a minimum of $100 monthly. Yeah, and the expense ratio you need to take note of, because normally bonds are quite straightforward. It's just the coupon and the interest rate and the risk level. So if I were to choose, I would want something that have a lower expense ratio lah. Unless they are doing active investing, which means they buy and sell bonds not just for the interest but also for the capital gain. So that one, the expense ratio may be higher. But other than that, you should look at low expense ratio because bonds are just you give capital, you take interest. So it's not that complicated. So bond funds are a way to diversify without paying 250,000. So you can actually pool a lot of people's fund. So everyone may maybe just give 1,000. So for about 10 million, you need at least 10,000 people. So they can actually diversify and have a low risk level in this case. Okay. So for this third one, we'll be talking about simple interest and compounding interest. Okay, what is simple interest and how is it calculated? So simple interest is mostly based on the amount of capital that you have. And number two, which is very important, it is not compounded. So how do you calculate simple interest? So for example, you have a capital of 10,000 and at the end of maturity, you get 12,000 in 4 years. So if we use simple interest to calculate, the interest rate will be the difference, which is the 2,000 divided by the number of years, 4 years, divided by the capital. So in this case, you get 5%. Okay. For internal rate of return, it's actually based on the capital, which is what we are trying to talk about. And it is actually compounded and time sensitive. So normally, how do we calculate? It's not simple. So just an example, there's a capital of 10,000 and at the end of maturity, there's 12,000 in 4 years. So for this, the internal rate of return is actually 4.66% only. So what we are trying to say is, for IRR and for compounded interest, you are looking at interest on interest calculated in. But for simple interest, you don't care about the interest, you just calculate the capital and how much interest you get. But there is a very strong issue with this. If, for example, if let's say the runway is very long, you actually give you a 4 cents of returns. So let's say you have 10,000. So at the end of 20 years, you get back $24,000. So based on simple interest, right, if we use the earlier calculation, it's actually 7%. So David, if it's 7%, do you think it's very fantastic or not in this case? It's like equities like that. 7% returns, as they say.
Is not high lah. Yeah.
It's not high but for 7%, it's like equity return already for most people.
Actually,
diversified equities
more than 7% per annum on equity lah.
You can but 7% bond low return one low risk one 7%.
For bonds
yeah.
Okay lah.
But if you look at it in the IRR perspective, right, it's actually 4.475% compounded yearly. Okay, the IRR assumes that the money that is inside the pot, right, you cannot take out and reinvest. You cannot take out and do other things. So it's stuck inside. You earn that interest for that 1 year, it's stuck inside already. Yeah. So simple interest is not good in this sense because it gives you a really 4 cents of returns. And a lot of people don't realize it. So sorry to say this, insurers also like to use absolute return. So the absolute return of a policy, right? If you run 100 years, you give up to 4 to 5 times of capital.
The numbers will definitely look a lot better because it's just compounded interest.
Yeah, so that's why simple interest. No, honestly, I will not ask people to use simple interest unless the years is like
Yeah.
2 or 3 years at most. If it's 20 years, 30 years, you don't use compounded, I think something is wrong already.
I think it's a 50-60% discount.
Yeah, so wow, this is very bad. Okay. So I think we have come to the bonus section. So Jimmy, on to you.
Oh,
Yeah. Okay, sure.
our ILP.
Okay.
You know, when we got our ILP initially, it was like 60% bonds, 40% equity.
Mm.
After about 2 months, 3 months, we shifted over to 80% bonds, 20% equity. And for the past 1 month in August, although our equity is red lah, but our bonds are green. And because our bonds are 80% compared to equity, 20%, our net asset value actually grew by about 1%, even though the markets were falling.
So is it interesting that we adopted a very defensive stand in this climate? I thought we were supposed to be selling bonds and buying more equities, right?
Uh, is it? No lah. I mean, it's grown a lot since we started this ILP.
Yeah, so that's why we actually sold our equities portion to rebalance to bonds. Oh yeah, I think we are supposed to end the policy in January. Okay. Yeah.
January next year.
January next year. Okay. So I think we are going to the bonus section already. So Jimmy, on to you.
Okay, right. Thanks Ethan and David for the fireside chat. So right now we are going to the bonus section whereby I'll be sharing about commercial properties. Okay, so I put a disclaimer first. I joined MG Global as a marketing associate. Okay, so in case some of you are not familiar with the brand, MG Global is a commercial business space consultancy since 2007. Yeah, so it's been around for almost 13 years, I guess. Yep. So let's move on to the next slide. So what is MG Global? Okay, so regards to the services, right? MG Global provides a service on leasing, sales, and acquisitions of commercial/business spaces, such as office, co-working, F&B, industrial, and warehouse land. Yeah, so this is a list of a full suite of types of space that MG Global can provide as a service. Yeah, so just a point about co-working space. So maybe I'll move on to the next slides about the frequently asked questions. Okay, so sorry, before I move on to the next question, I first share about a list of clients that we have served since 2007. Okay, so as you can see from all these brands here, you may see some of the brands which you are familiar with, like for example, Starbucks corporations. So some of the outlets you see island-wide, they actually consulted MG Global for the space to secure at various outlets. Yeah, so Starbucks is one of our clients, and also Mercedes-Benz Financial Services at OB. Yeah, so in case some of you are not familiar, Mercedes-Benz is an automobile business. Okay, and then in Singapore context, some of those who intend to buy a car from Mercedes-Benz, naturally they will take up a loan to buy the car, and then Mercedes-Benz decided to have a financial services arm to offer car financing for the clients to take up financing and buy a Mercedes-Benz car. Yeah, so that's how it got started. And then another brand you're familiar is Blue SG. Blue SG is a local company offering a fleet of electric powered cars. Yeah. So, and then one more maybe I mentioned is Crocs. Crocs is actually the brand where you see some of the slippers are manufactured by Crocs. Yeah, so that's the brand. Yeah, so I think that's all I will mention. Next slide. Okay, so these are commonly asked questions when I share about my role as a marketing associate. So the first question was about does your service offer residential property? So my answer is no. MG Global is a company that offers services for commercial properties and only commercial properties. Yeah. And then next question asked is, am I a marketing associate or am I a property agent? So the answer is I'm a marketing associate. So my role is to promote MG Global services and also to generate leads for property agent. So at MG Global, right, they have a distinct division of property agents and marketing associates. Yeah. So the property agent side, they are focused on doing sales and closing, and then the marketing associate is the marketing team that market services and get leads for property agents. So that's part of their business model. Yeah. So next question, does our services include finding co-working spaces? So our answer is yes. The property agents do help to source for suitable co-working space for you. Okay. And the next question asked is, if there are so many co-working spaces island-wide, why engage a property agent to help you find instead of finding a space for yourself? So the answer is, there are cases whereby if the client is represented by a property agent to source for a co-working space, there's a chance that the landlord will offer a discounted rate for the property agent's clients to take up. Yeah. So normally the prices that you see in the public for co-working space is what you call the public price. Yeah. But actually, if you consult a property agent to source for a space for you, you may get a discounted rate as compared to the public pricing. Yeah. So that's the difference. Okay. And then next question asks, do I have a list of properties for viewing? The answer is no, I don't have. If you want to see a list of property in the catalog, I'll have to refer you to the property agent site for you to have access to the listing. Yeah. And then next question is financing option. So for a list of financing options, again, I have to refer you to property agents to advise you on the financing options that you have. Yeah. So these are all the commonly asked questions so far. So, sorry, let me check if there's any questions from... No questions so far. Okay. So I think that's all that I can present so far. Any questions from both of you? Maybe? Or any questions from the watch party from your side?
Okay, currently there's no question. Okay, but maybe I'd just like to understand. What was interesting is, right, when you talk about there is a public rate and a property agent rate. So am I right to say that why would a landlord put the public rate high, and then don't they want to just like make it as affordable as possible so that they can source for the renter themselves? Isn't that like a bit
Okay,
of a middleman in this case?
okay. What I can say is, according to NG Global, right? Some of the co-working space, right? When they know the landlords, they know that the property agents have the expertise to know the market rate across many different co-working spaces, and so the landlord will have the interest to provide discount rate for the property agent to offer to the clients. Yeah, so that's why there may be differences in the public rate and the discounted rate when offered to property agents. Yeah.
There's another reason.
Another reason? Okay, because if the landlord can offer the discounted rate, then the property agent is more likely to, close case for the clients to secure that space. Yes. Instead of having a chance of the agent having to hop to another co-working space. Yeah, and potentially lost a client out of it. Yeah.
Usually in co-working spaces, because they have already existing tenants in the spaces, they can't just their prices. It will affect their entire revenue. So when they offer these new tenants from property agents, they can offer a discounted rate because it's a external source. It's slightly different. The process is different, so you can offer them this price without affecting your existing tenants.
Okay, but then my next question would be, wouldn't existing tenants and new tenants talk to each other also? Yeah, that's
But they can. But even if you do, what can you do about it? Your tenancy is already fixed.
The contract is locked in already.
yeah,
By
but
that.
that would potentially like let's say like if I'm a tenant, right, then next year I'll start to negotiate even lower because you can really give other people discount. So
Based on the then market rate, but you have to understand that this is all fluid, and the landlord's aim is to make sure that they want to be as fully tenanted as possible.
Fully occupied, I guess.
Yes.
yeah, so
But minimum.
if I see that the economic condition is not so good, then I'll just negotiate as low as possible. I mean, if I'm on the existing tenant, then if you don't want, then I just go to next door. I mean, since I already know that there are so many co-working space, and potentially most of the co-working space will give discount. Then since I already with you, right, I'll negotiate further, like maybe another 30% discount. Then it's really about negotiation skill already, right? In this case.
Yeah. If it makes sense
Okay.
for the landlord to continue, then they'll continue. If not, then they'll just let you know that it's not available.
Then since it's not available, then I'll just tell the other tenants, hey, they don't give me this rate. So if you want more rates, why not we just find another co-working space, then I just negotiate for everyone. Oops, yeah, something like that. Someone could just initiate something like this.
Already fixed, so you can't just bring them over as well.
Nah, but it's a bit like, okay, now I know because my contract is up first one. So I go to the next co-working, I tell them I have a whole list of people who can potentially come over because I cannot get a good rate from my current landlord. So I negotiate the next co-working space similarly.
Usually they won't wait that long for your income tenant in the future. So if it's available now, they need it filled now.
Okay, that's interesting.
Yeah, because as you can see from the previous slide, under services, right, they also cover negotiation services. Yeah. Okay, sorry, I didn't show in the slide. It's in it's okay. If you look at our official website, sorry, my official Facebook page on MG Global, you'll see that they also cover negotiation services. Yep. Okay, you close the sharing, is it?
Anyway, for commercial landlords, they only look at individual companies. Unless you're a conglomerate, then it's a different story. But if you're
Yeah.
individual companies, it'll be negotiated individually.
Yeah, you'll see that. There you see point number 3. I think rent review and contractual negotiation services. Yeah, they covered. Yeah, they negotiate pricing for you. Yeah, that's the official service that they'll provide. Yeah. Yeah. So
Yeah, David, you have any other questions there?
No, not really. But just to say, for properties, they can be quite interesting of the rental. Sometimes you might think that prices are down, but in some places they are not down. It depends on supply and demand, really. If you read the news, you will notice that those like right now for residential, HDBs in Woodlands, areas near JB and near the factories and where you will find a lot of Malaysian workers, their rental are going up because of the short-term demand due to the lockdown of the causeway. So that displaces a lot of people who cannot afford higher price places. So you will notice that a lot of low price places are being snapped up. Yeah.
right.
Okay, actually, I can share a bit of. I look for rental flat for my father, and what I have noticed is that before I was looking for my father, right, the rental was around $500. Yeah, it was quite easy to find. So when I was looking for my father's one, right, suddenly the like what David said, the $500 and 451 is almost gone already for a room.
Like all taken up by someone else.
Yeah, all thinking about, and it was very fast lah. Once it's listed, right, maybe the next 3 days, if you don't go and ask them, it's gone already. At least that's my experience for that 2 months I was helping my dad.
I see.
So it do have a supply and demand effect. So you need to be very aware of what it is.
This is a temporary situation. It will revert back when the causeway opens.
Okay. Okay. Oh yes, I need to cover the point on commercial property as an investment. Okay, so if let's say if you want to buy a commercial property as an investment, make sure you know what you are buying. What I mean by that, you need to be first aware of the different types of spaces, for example, office, retail, F&B, and the preferred areas, like for example, Ang Mo Kio, Toa Payoh, Ubi, okay, your preferred areas, and what is the amount of space in square feet that you want to buy, and your budget. Yeah, these are the most common parameters that you need to know for yourself. Okay, then you can start to think about what you want to buy. Yeah. So, any thoughts from the floor? Do you think these parameters is reasonable?
Yeah, seems okay.
Okay, right? Okay, can. Okay, so yeah, I think that's all for the bonus section. So with that, thank you guys for tuning in. We hope you find this episode valuable for your own investments and about commercial properties for rent or to buy. Okay, so now we're going on to the Q&A section. So if you have any questions, now's the time to pose as we are now addressing them. No questions from our main Facebook Live so far.
None from mine also.
Don't have. Okay, so if there's really no questions, then we shall end this episode. Okay, yeah. Okay, I think we're going to end this episode. So, okay, again, thank you for tuning in. So if you still have questions with regards to investments and commercial properties, feel free to post your questions in the comment section below and we will address them during the next episode. So as you can see from the last slide, there's this QR code whereby if you scan the QR code, you have access to our landing page where you can reach us on website, Facebook, YouTube, and Telegram channel. In our Telegram channel, you have access to a list of resale insurance policies that we have. So if you want to know more details about these insurance policies, do reach us on Telegram channel and we will get back to you. So speaking of the next episode, as of today, we are still deciding on whether to hold it on the Friday or Saturday. So we'll update you by Monday afternoon if we are going to hold it either on Friday 5 p.m. or Saturday 3 p.m. for JEDi episode 20 on investments part 9. Right, so if you want to be notified on the confirmation of our next episode, do like us on Facebook. Okay, and if you like our content and be notified for future episodes, do share this post. So hopefully we see you next Friday or Saturday, and may the finances be with you. Okay, goodbye.